today. Look forward to your testimony, and we'll start with Mr. Sekula. Mark Sekula is the Senior Vice President of Business Services of the Randolph-Brooks Federal Credit Union, one of our nation's leading credit unions, serving more than 300,000 members, many of whom have served in our armed forces, I understand. Mr. Sekula is testifying on behalf of the National Association of Federal Credit Unions, the leading trade group for our nation's federal credit unions. Welcome.
Thank you. Good afternoon, Chairman, Ranking Member Graves, and members of the committee. My name is Mark Sekula, and I am testifying today on behalf of the National Association of Federal Credit Unions, NAFCU. I serve as the Senior Vice President of Business Services for Randolph-Brooks Federal Credit Union, headquartered in San Antonio, Texas. This June, Randolph-Brooks Federal Credit Union was recognized by SBA Administrator Karen Mills as the SBA 2009 Credit Union Lender of the Year. We are also ranked as the 5th largest SBA Patriot Express lender in the United States, with year-to-date volume for 2009 with 133 loans for approximately $8 million. Randolph-Brooks is also ranked as the #1 SBA lender in the 55 counties in our SBA district for 2009. Randolph-Brooks started its business program only 5 years ago, and today we have over 16,000 business accounts. We only started SBA lending a little over 2.5 years ago at the request of our members, and we currently have 414 loans for about $20 million. We grew $13 million of that from 2008 to 2009, as businesses turned to us for credit after losing other sources. Through fiscal year 2009, which for the SBA runs from October to September, we generated 153 loans for $8.9 million and helped create 396 jobs and retain 799 employees. It is also widely recognized that credit unions did not cause the current economic downturn. However, we believe we can be an important part of the solution. Credit unions have fared well in the current environment and, as a result, may have capital available. Surveys of NAFCU member credit unions have shown that many are seeing increased demand for mortgage and auto loans as other lenders leave the market. A number of small businesses who have lost important lines of credit from other lenders are turning to credit unions for capital that they need. Many small business owners are members of credit unions around the country and rely on our services to help make their small businesses successful. Our nation's credit unions stand ready to help in this time of crisis and, unlike other institutions, have the assets to do so. Unfortunately, an antiquated and arbitrary member business lending cap prevents credit unions from doing more for America's small business community. The current economic crisis has demonstrated the need to have capital available to help our nation's small businesses, especially in troubling times. Many credit unions have the capital other lenders cannot provide, but are hamstrung by this arbitrary limitation. It is with this in mind that NAFCU strongly supports the passage of H.R. 3380, the Promoting Lending to America's Small Businesses Act of 2009. Introduced by Representatives Konjorsky and Royce, this important piece of legislation would raise the member business lending cap to 25%, while also allowing credit unions to supply much-needed capital to underserved areas, which have been among the hardest hit during the economic downturn. NAFCU strongly supports the reintroduction of the Credit Union Small Business Lending Act, which was first introduced by Chair Velasquez in the 110th Congress. We also support the legislation currently before the committee, H.R. 3723, the Small Business Credit Expansion and Loan Market Stabilization Act of 2009. We believe that this legislation takes important steps toward improving the SBA and its 7A loan programs and will help credit unions do more with the SBA. While I cover this bill in more detail in my written testimony, an important aspect of this legislation is a continuation of the program started under the American Recovery and Reinvestment Act of 2009, including the continuation of the 90% guarantee on SBA loans and the lower fee structure. The continued guarantee is particularly helpful for credit unions, as the guaranteed portion of the SBA loans does not count against the arbitrary member business lending cap. We also applaud the provisions that would assist small lenders that do not participate in the Preferred Lender Program and that would have the SBA provide training to smaller lenders. Finally, we believe the Capital Backstop Program established in this bill could be an important tool in allowing credit unions to get capital to small businesses in a time of need, as the SBA would handle much of the administrative work in such a circumstance. In conclusion, the current economic crisis is having an impact on America's credit unions, but we continue to provide excellent service to our members. Credit unions stand ready to help our nation and our nation's small businesses recover from the current economic downturn. Legislation such as H.R. 3723 and the Promoting Lending to America's Small Businesses Act, H.R. 3380, would aid credit unions in their efforts to help our nation's small businesses. I thank you for the opportunity to appear before you today on behalf of NAFCU and would welcome any questions that you may have.